Hey everybody, welcome to your crypto chart update for December 29th, 2017. As always, I'm your host Tim, a retail investor and journalist. Today we have a special episode of my crypto chart update where I will look at one specific cryptocurrency. We're going to take a deep dive into Ripple, XRP. And that's because it's been outperforming the other coins as of late, and it seems like a good opportunity to have a look at it structurally in the long term and on a relative basis as well against other coins. Before we begin, just want to mention my sponsor, CryptoKing.org, which is a great cryptocurrency news website. It's pretty simple, no frills. I really like the layout. They have all the coins and the basic news, as well as my cool video over here on the right side. So check out CryptoKing.org. And guys, if you like my trade ideas, you can always go to tradingview.com and check out my blog under Berlin Trader 591. If you go there, you can really scroll down and see all my trade ideas, how I set my stops, how I make my targets, my predictions for some altcoins and for all the different cryptocurrencies, Litecoin, Monero here were recent candidates. And I do trades on different time frames. I do trades on a weekly basis, on a daily basis, and on a 30-minute, 15-minute basis. So if you hook up to my blog, if you go to tradingview.com, Berlin Trader 591, you can see my latest trade ideas. On my blog, you can also sign up for my Telegram, where I send out actionable trading signals. And if you want to support me, you know I always appreciate support. It means a lot to me, and it helps me out, gives me more reason to do these videos because they take a lot of time. But just scroll down under my video and you should see some links to TradingView to sign up for TradingView charts. You can donate to one of my wallets, or if you want to sign up or buy a hardware wallet like a Trezor or a Ledger Nano, I also have those affiliate links there. I also trade options at Tastyworks, which is a really great, cheap options trading site. So sign up there with my link, and Binance is what I usually use for all my altcoin trading, Bittrex and Binance, but here I have my Binance link, or Binance, I don't even know how you say it really, but click through my links, because if you sign up to those services, I get a little piece, just helps me out, and helps me out to fund these videos. So guys, today we're going to talk about Ripple, and if we check out the cryptocurrency market capitalizations at the moment on coinmarketcap.com, we see that Ripple has moved into the second position in terms of market cap, and that's pretty impressive. It surpassed Ethereum, it surpassed Litecoin in market cap. So Ripple is number 2 market cap. Who would have thought it a few months ago? Why is that? Well, you see, it's gone up 40% in the last 24 hours. Compare that to Bitcoin, 0.57, or Ethereum, 3.47, or Litecoin, minus 4%. And to be honest, the bigger coins, the Dashes of the world, the Moneros, the more pricey coins haven't really gone anywhere. And of course, we've seen new contenders in the top spots like Cardano and IOTA. But you know, Ripple has really held its own lately. It broke out and it's continued to move higher, even in the face of some weakness in the overall market. Now let's check out the charts. If we go to Ripple, I have here starting with a weekly chart view. So every candle is 1 week, and I like the weekly view because we get a structural sense of what's happening, kind of a bigger picture view, right? And what we can see is that in 2017, Ripple basically took a huge jump up to around 30 cents on the dollar. Then we consolidated pretty much in a sideways range, a pennant pattern, a flag pattern, however you want to call it, until the end of the year. And around here is when I started to enter my position personally, because it just looked like a healthy consolidation pattern. You could see that pressure was building with this ascending bottom trend line. We also saw on the weekly chart, you see the volume is higher, it's green, and that's a good sign. That means more buying, less selling. Here all the red volume spikes are smaller, and that's less selling. Now in the stock market and in options trading, I usually don't use volume so much because volume is kind of misleading in the stock market these days. In the past, it was more of a valuable signal, but these days with algorithmic trading and all the manipulation that goes on, you can't really trust volume as much as you used to. But in cryptos, you know, it's still a very human market. You have algorithms, but they're programmed by humans, and the big names and the tricksters and the short sellers haven't really gotten into the crypto market as much as they are in the stock market after decades of developing a presence. So what we see is the volume signals are back in action for crypto. So we're going to check out volume on each chart, but we see the green volumes are bigger than the red volumes. It means more buying pressure. And eventually we did see a breakout, and we've seen 3 weeks straight up. 1 green candle, 2 green candles, 3 green candles. So we've basically seen 3 weeks of green activity. Now within those weeks, we're going to look at the daily charts. We've seen some volatility. But if you just look at the weekly, I really like it because it cleans the chart up and we just see the overall trend. And that overall trend is an uptrend, right? And you see back in April, we had 1, 2, 3, 4 green candles. So far we've had 1, 2, 3 green candles. So if we go with analogs, then we could see another leg up easily. However, if we look at volume, volume has been decreasing each leg up, each candle. So again, once that volume peters out and sellers come in, then we might see a pullback. But until that happens, we just see that as a warning. Okay, volume is decreasing, and that's normal. But we should expect a pullback at some point, and that's where targets come into play, right? So we want to set our target. So what is our target? Well, here I've made a Fibonacci retracement based on the top of the consolidation range in the spring. There we go. Whatever. It doesn't have to be exact, to be honest. I mean, it's more general areas. Okay. And then the bottom of that Fibonacci retracement is at the bottom of that consolidation range, at the widest point. So that gives us a few targets, and to be honest, we've hit them all, right? We hit the all-time high target, the 100% target. We blew through that. We hit the 168.1 target. We hit the measured move 200% target, so double the consolidation range. We hit the 261.8. We hit the 361.8. Now you notice that these ranges actually did provide some support and resistance. Look here, we went here to this target 361.8, and we came back down to test the 161.8. Then we came up, and now we're hitting right now the 461.8 retracement, and we've pulled back a little. That's at more around one. Here on Poloniex, it's 156, but on other charts, it could be 170, it could be 160, depends on the exchange. Right now I'm using Poloniex for the weekly chart, just because it has the most data going back on TradingView. So right now everything doesn't look strange, right? It's not a surprise that this happened. We had a long consolidation that had a huge base. It was over several months, and the longer the consolidation, the bigger the blowout's going to be, the bigger the breakout, the bigger the explosion, the bigger the explosion, and the higher we're going to fly. And we have flown high, right? We basically exploded out of that consolidation, hit the 161.8 with our first candle. With the second candle, we hit the 361.8, and now with the third candle, we're hitting the 461.8. So isn't that just beautiful, right? That we hit the 161, then we hit the 261, or sorry, the 361, and now we hit the 461. So every candle has hit a new Fibonacci target line and pulled back exactly on that line. What does that mean? Well, that means that people are watching those targets, right? That a lot of people are waiting for those targets and they're taking profits. So why not be ahead of the pack and take your profits at those points and wait for strength to come in? Of course, people that are holding long term, that are hodling, are going to see maybe a bigger return. But of course, I mean, you can never predict really that a coin is going to, you know, surpass those targets. There are plenty of coins that hit the 161.8 and pull back, right? But Ripple has gone through those targets like butter, and that's a great sign. That's a bullish sign. And so this chart is very bullish, and it looks to continue. Right now there's no sign of stopping. So what is our ultimate target here? Well, it would probably be the next Fibonacci retracement, 561.8. 661.8, and we're just going to keep going up until we pull back. And you cannot really make it's hard to make targets when you don't have any overhead resistance. These are all-time highs. Another thing we can do is check out the measured move from the big breakout back in the spring to the top of that flagpole, and that you were looking at about I don't know, pretty big, I don't know, 220, 300, 400%, hundreds of percentages, right? So there's a lot of room for this chart to move. This is a log scale, so of course the percentage from 0.00 from 0.1 to 0.3, I don't know, what is that, 1000%? So we could be in for another 1000% move from that breakout at 0.2, 0.3, 30 cents. So we could easily, yeah, make it to 30. Why not? But right now we are just taking it one Fibonacci level at a time. Let's check out another exchange, Kraken, but this time on a daily time frame. And on the daily time frame, we see that we broke out of that consolidation. Right now, I like Kraken because they use real dollars. You just have there's like a smoother chart on Kraken. I don't know, it just has like a smoother look. I like it. I kind of measure Ripple usually on Kraken. So we have that breakout from that consolidation around 30 cents, and we had 3 strong candles before consolidating in a flag, a breakout, a consolidation, and now we're breaking out the third time. So I would call this the 1, 2, 3rd breakout, the third wave of this pattern. So usually around the 3rd or the 4th, right, extension or 4th wave, you know, that's when I'm not a big Elliott wave theory guy, but I do like the numbers seem to work out, because 1, 2, 3, 4, you can imagine things get overstretched. The buyers have been worn out. The number of new people that have heard about this Ripple kind of, you know, dissipates, and you know, you start to get people taking profits around those breakouts. So right now we're on number 3, so it looks pretty strong, and we could easily have a 4th breakout and a 5th breakout, but right now we're still on the 3rd breakout. So let's break that down. So we broke out of that consolidation, we went sideways, we broke out again, we went sideways, we broke out again. Now what you see that formed here is a really nice ascending wedge pattern, a rising wedge. Now rising wedges are cool because they point up, but actually they kind of can have a bearish influence on price, because think about it, you're kind of rising, you're consolidating upwards, and like you're getting heavier and heavier and heavier and heavier until finally there's no more momentum and the price cracks, right? But what happened on Ripple was the opposite, right? What happened on Ripple is the price rose in the wedge, consolidated, and now it's breaking out. So today we're breaking out of a rising wedge. That is extremely bullish and also somewhat parabolic. This happened on Bitcoin back in early December. We broke out of the parabolic logarithmic trend, right? The trend on Bitcoin was like this, yeah, and Bitcoin broke out, kind of almost went backwards on itself. I mean, it was going so crazy, right, that it broke out of that parabolic trend. And to break out of a parabolic trend that is logarithmic is incredibly, incredibly bullish. However, it also can be a sign of mania, a sign of a bit of a bubble. It depends on your time frame, right? So right now we're breaking out. So right now, if we are above this rising wedge trend line on the daily chart in Ripple, then we can be long, because we have broken out of a major resistance level. And if we look at volume again has been strong, a lot of green volume, and so it's a very bullish signal, and we can expect to hit our targets. And our targets on the daily chart I based on the low of the flagpole back in the consolidation before it broke out in the beginning of December, and the first breakout high, and then the next breakout low, the candle here. So again, it's not exact. You could put your fib level here, you could put it a little lower, you could put it on the breakout. You know, we have different people doing different things, but the point is that generally the fib levels kind of congregate in one area, and right now we're, surprise, surprise, coming up against that 161.8 level, and we've seen some resistance, we've seen some pause at this level, some profit taking, and that is to be expected. But it's bullish, you know, we hit our target. That's a bullish sign. It's not that we sell now, it's that we maybe take some profits off the table and we wait to see what happens, right? If we consolidate here and break out, that would be a bullish sign, and our next target would be the 261.8 above $2. If we break down through that wedge, that would be a big sign of weakness, because that means our breakout would fail and we would break down back through that wedge. And after that, you probably see a lot of selling come in, people panicking a bit, and we see a drop back down below $1. But right now, if we rest here a bit at this target 161.8 level, after breaking out of this wedge, we could easily go above $2, and our next target would actually be around 230 on Kraken. Now Kraken runs a little hot. The prices on Kraken are often a bit higher than other exchanges. So in other exchanges, that 230 might be $2 or $220 or something like that. But on Kraken, it's 232. It's the 261.8 of the first breakout and pullback. Okay, so yeah, on the daily chart, we can see that rising wedge. And on the 4-hour chart, I really like how the pattern shapes up. And you can see it even a bit better. I use the 4-hour chart a lot for identifying patterns because it's a good mix between granular 60-minute charts and longer-term daily charts. So I really love those 4-hour charts. And we see that wedge, really beautiful, beautiful, classic wedge pattern, rising wedge, right? Narrowing, consolidating, little breakouts, pullbacks, little breakouts, pullbacks, until finally it broke out to the upside. And we just see that perfectly, right? We saw that touched, it consolidated, it had a little chance here to fall down or break out, and it broke out on high volume right here, down here. High volume on the 4-hour chart as well. And that's a great sign, because that's the most volume we've seen since the original breakout back in the beginning of December. Yeah, in the middle we had some volume, but it's kind of a mixed bag there. And here in this whole consolidation period, we saw very low volume. But in the last days, we've seen volume really pick up, and right now it's still increasing. So that's a bullish sign that volume is increasing. The next thing we want to check out is the RSI. We see that RSI is overbought above 70, and that's a very strong sign. If we have overbought conditions like back here in the beginning of December, you see that overbought conditions is not time to sell. Overbought conditions means time to buy, because that means buying has momentum. Right now we're just starting this new phase of overbought. So if we can stay in overbought and the volume keeps pumping in and we get some green candles above this wedge, this could easily be a big breakout to 170, 180, 192 and above. Okay. If we check out the daily, we are basically in overbought territory. And if we check out the weekly chart, same thing, we're in overbought territory. Yeah, there's really no reason to get bearish on Ripple. Short-term trading, let's dive into like a 15-minute chart, a 30-minute chart. You know, if you're trading 30 minutes, then you have these trading signals, right? And you can connect them with the bigger time frames. We want to compare our time frames. Here we have the longer term wedge trend line, and you see that on the 30-minute chart we came up to that wedge and we paused there for a moment, right, until finally breaking out. And you can buy on that breakout. So usually what I do is I'll have my longer term charts for the overall trend, and then I'll break it down to the 30-minute or the 60-minute and buy more granularly on the breakout to get a better price. Another thing which I really liked that we had yesterday, man, to be honest, I didn't think it would break out so fast. We had a really nice cup and handle here, really nice cup and handle pattern. Based on that cup and handle pattern, my target was, let's see, Yeah, my target was like, yeah, around, my first target was here, 136, and we came up there, we consolidated there. So you see how we paused there for a few hours until breaking out again, and then we paused at the trend line, and that was the big question: would we break down through that wedge, or would we break out? Well, we broke out, and we broke out in a big way, and we hit our second target at the 261, and you can see we had some more consolidation under that level. Another little flag. So these are just breakout and flag, breakout and flag. And now we broke out that 261, and now here we are consolidating, surprise, surprise, at the 361.8 Fibonacci level. So those Fibonacci levels are holding beautifully. Every breakout takes us to a new Fibonacci level. We consolidate there, and as long as we don't break down from those levels, then we're going to keep moving up. And the next Fibonacci target is that 175 461.8 level. So that would be another flag. And you know, this wedge provides us with a new level to trade against, right? So our new support level, our new stop, is that wedge. So now we can make our targets from that wedge. And if we go here and flag over like this, then our next target would be in that 175 180 range. So remember, as we make new breakouts, as we surpass our targets, the old targets become our new supports, our new levels to trade against. So if we break above this 361.8, you know, that could also be a short-term support and a level to trade against. So you can decide, do you want to trade above this wedge and stop around here under the wedge, or do you trade if it breaks 361.8, this level 162, and you stop if it goes below that level, and you trade a bull run above that level? So it's more about your risk, right? If you trade above this wedge, then you're taking more risk to the downside, so you want to trade smaller. If you're trading tighter with a stop here under the Fibonacci level, then you want to you can trade bigger, but you have to keep your stop and get out if the trade goes the wrong way. Don't be afraid to get back into a trade, right? If you break down and then come back up and then break down, you know, don't be afraid to re-enter once we make that break once and for all. But of course, you don't want to keep setting your stops so tight that you get whipped out and of every trade. So you really have to kind of find your risk tolerance, find your sizing, find out what works for you, keep adjusting your strategy, right? If your stops keep getting hit, then maybe you should widen them out a bit, right? On the other hand, if your stops are so big, then you have to trade so small, then you might not make enough to justify the trade you're trading. But that's something for another discussion. Right now we're looking at Ripple, and now we want to look at a relative market analysis against Bitcoin. Let's check it out on the daily chart. And this is against Bitcoin, and I really like this chart too, because we had this huge downward underperformance against Bitcoin. We were just crashing against Bitcoin. Man, horrible place. As Ripple was consolidating sideways against the dollar, it was just like losing value against Bitcoin, until finally one day it broke out. Now that was a great sign. If you had gotten that breakout, right, it broke out in a big way, so maybe you couldn't catch it. But if you bought around here when the breakout looked really good, you know, okay, this is obviously a breakout, it's serious, I'll buy in, then yeah, you would have had a similar run against Bitcoin. And you know, I usually trade against dollar, to be honest. I would like to trade against Bitcoin in the future, but right now, you know, my life is in dollars, so I trade against dollars. But we have a nice support level. I like to draw squares because supports are more like areas. We had this support level that was support back in the summer, and we've now broken through that as well. So we broke out of this consolidation down here. We passed the 200-day moving average. We consolidated a bit under this support, and now we're breaking out of that support. So this is our new stop level in Bitcoin, and we want to be long if we're above that level, which is like, I don't know, 0.00000093, and I think we're going back to the old highs against Bitcoin. So that means, of course, if Bitcoin crashes and Ripple stays the same, that this chart will still go up, right? Because this is relative to Bitcoin. So I think there will be a combination. I think we're going to see some bear market action crashing in Bitcoin, as well as some stability or price increase in Ripple. So it's pretty cool that Ripple is giving us a chance to trade and make some money while Bitcoin is crashing. But yeah, Ripple looks like it's, I mean, next stop is those all-time highs in Bitcoin. Looks pretty good. Check out Ripple against Ethereum. Same thing going on, right? We had that support that we broke out of in the middle of December. We broke out, we retested, and now we're breaking out again. So isn't it beautiful how the patterns, technical analysis works on all of these charts, on a daily time frame, on a weekly time frame, and intermarket analysis relative, you know, Ripple relative to Ethereum, Ripple relative to Bitcoin. We see the same patterns happening, right? We break out, we pull back, we retest support, we hold the support, and that gives us strength to break out even further. So on Ripple, we're in against Ethereum, we are in uncharted territory. We have no real highs to measure against, so we'll take a fib analysis of that range before, and it looks like, well, what do you know, right? We came up against the 161.8 fib level, we bounced back, we broke through, and now, same thing, we're kind of pulling back a little from the 261.8 fib level. And it should do something like this, right? To the 361.8 fib level. And then again, to the 461.8 fib level. And so you get these golden ratio moves that just go along with human behavior, as well as technical analysis. People are watching those levels and taking profits there. So against Ethereum, we can also see easily, I think, if we get above 261.8 target, we're going to get to the next target at the 361.8 level. Now, am I trading Ethereum against Ripple? No. Am I trading Ethereum against Bitcoin against Ripple? Sometimes, but not really. But I use these charts, these relative charts, to add to the weight of my evidence, right? Do these charts show weakness or do they show strength? Well, they show strength in Ripple against Ethereum and against Bitcoin. So based on that, I can say my bullish thesis is probably more correct than wrong. Now, if these charts showed weakness, right, but Ethereum was still going up against the dollar, but Ripple was still going up against the dollar, but if Ripple showed weakness against Ethereum and Bitcoin, I might be a little more hesitant or reduce my position size when trading in Ripple, or there might be a better place to trade. If Bitcoin and Ethereum outperform Ripple, why would I be in Ripple, right? I want to be in the coins that move. But right now, Ripple is doing very well, and it looks strong. So guys, thanks for sticking with me in this really long analysis of Ripple. It's a 30-minute video, and I apologize for the length, but I really appreciate it. Please support me by clicking the affiliate links and send me your messages if you want me to do a deep dive on another chart, because it's really fun and I kind of get lost in it, to be honest. So thanks a lot, and until next time, peace.